Hello and a very warm welcome to our event today on the impact of the digital euro on the financial system. My name is Guntram Wolf and it's my honor to host today this event with Fabio Panetta. Fabio Panetta needs no introduction, but of course he is a member of the executive board of the European Central Bank and has spent a very distinguished career in the Banca d'Italia before joining the European Central Bank at the beginning of this year. And he is in charge at the executive board level for the strategy on the digital euro, meaning money that is fully digital and that is different to the current money in the sense that it's fully digital and issued by the central bank and not indirectly via the banking system. The digital euro is so far non-existent, but it is very actively discussed. And if it is introduced eventually, it will have many, many implications on the payment system, on financial stability, on the way banks operate, on many, many other aspects of our financial system quite broadly. And today we thought it would be very useful to hear from the European Central Bank what is really in their thinking at the moment going to be the impact on the financial system and how that should be structured so as to avoid financial instability, which some economists fear as a result of to be a result of a digital currency. We have time for Mr. Panetta's speech first. Then I will engage in a conversation with him. And he has been generous with his time so that you, our audience, have a chance to also ask your questions to Mr. Panetta. To do so, please, can I invite you to go on the website sly.do and type in the code word digital euro, and then you can ask your questions, and I will see those questions on my mobile phone and will ask not all of them, but some of them to Mr. Panetta so that we have a discussion also with the audience. So let me thank you again, Fabio, Mr. Panetta, for joining us today. And we very much look forward to your speech. And thank you for joining again.
Good afternoon to everybody. I wish to thank Bruegel and in particular Guntram for the invitation. It is a pleasure to participate to this virtual conversation, and I look forward to more lively face-to-face meetings. I will talk about the Eurosystem project on the possible introduction of a digital currency. This would be a radical innovation for a central bank, one that will likely have far-reaching effects on the entire European financial system. Indeed, throughout history, innovations in money have challenged and altered the structure of the financial system. Time and time again, innovations have given rise to debates about the risks they pose and the rewards they bring, as well as the role of central banks in building confidence in money. In today's discussion on the digitalization of payments, those debates sound familiar. Some fear that digitalization could crowd out cash over time, create instability, and even threaten monetary sovereignty. Central banks are therefore considering whether they should innovate themselves by offering sovereign money in digital form to the public at large. The ECB is considering whether to issue, alongside euro banknotes, a digital euro, that is, a digital form of money that, just like cash, would be a claim on the central bank instead of a claim on a private intermediary. But we must fully understand the economic, financial, and societal implications of issuing a digital euro. We should consider how we can achieve the benefits while preserving the stability of the financial system and meeting the needs of Europeans. Today, I will discuss the main effects a digital euro could have on banking intermediation, financial stability, and the international financial system. and I will consider some key design options that could address the risks involved. Let me start with the benefits of a digital euro in the context of the digitalization of financial services. In the field of payments and financial services, the past decade has seen a rising number of providers and innovative technologies and products. At the same time, we have seen a profound shift in payment preferences, with the use of cash in retail payments declining. This is the first reason why we are working on a digital euro, combining the safety of central bank money with the convenience of a digital means of payment in order to satisfy consumer preferences. Another reason is that while digitalization generates greater efficiency and lower costs, it may also pose risks for consumers and the financial sector. The global tech giants, the so-called big techs, are setting the pace of change. They are seeking to sidestep traditional distribution networks, including payment systems, through their control of social media, online marketplaces, and mobile technologies. This could lead to the rapid and large-scale take-up of the financial services offered by big techs, both domestically and across borders. Data-driven models could jeopardize privacy and pose the risk of personal information being misused. Moreover, integration with other services provided by big tech companies may threaten competition through tying, bundling, cross-subsidization, and winner-takes-all dynamics. This could crowd out traditional intermediaries and reduce competition in financial markets, limiting consumer choice. Finally, big techs may contribute to a rapid take-up of stablecoins, which could create systemic risks and even endanger monetary sovereignty. A potential answer to these trends is for central banks themselves to go digital in order to preserve money as a public good. A digital euro would aim to support digitalization while continuing to give people choice in how they pay and ensuring their payments remain competitive and secure. A digital euro would be designed to be safe, costless, easily accessible, and simple to use, thereby supporting financial inclusion. It would have the protection of privacy as a key priority, thereby helping to maintain trust in payments. A digital euro would be available to households, merchants, firms, and financial intermediaries for euro area-wide payments, thereby helping to unify the European market. And it would reduce transaction costs while making sure that central bank money remains at the core of the financial system, underpinning stability. A digital euro would be designed to be interoperable with private payment solutions so that it could be accessed through them. It would thus level the playing field by making it possible for all market participants to offer payment solutions at a lower cost. But a digital euro could have unwarranted effects on the financial system. In the broader debate and in some responses to our public consultation, a number of concerns have been raised about the potential impact of the digital euro on the financial system. Paradoxically, a digital euro may prove too successful. If it is not properly designed, its main strengths, namely safety and liquidity, could affect monetary and financial stability on three fronts. First, financial intermediation in normal times. Second, financial stability in crisis times. And third, the international financial system. Let me start with the effects on financial intermediation in normal times. A digital euro could affect financial intermediation in several ways. It could crowd out banks from the payment business and deprive them of payment-related income and customer information. It could also attract deposits, especially if it were offered without constraints on individual holdings. The concern is that this could lead to less stable and more costly funding, lower bank profitability, and ultimately, lower lending. This, in turn, could constrain the financing of the real economy. I would make 2 points here. First, the risk of bank disintermediation depends on the design features of a digital euro, we can and should design it in ways that prevent this risk. I will come back to this crucial issue in more detail. Second, the ECB does not plan to interact directly with potentially hundreds of millions of users of a digital euro. We simply would not have the capacity or the resources to do so. Financial intermediaries, in particular banks, would provide the front-end services as they do today with cash-related operations. Furthermore, beyond such design adaptations, economic thinking on the possible impact of a digital euro on financial intermediation is not clear-cut. One consideration is that introducing a CBDC, a central bank digital currency, is by itself neutral in terms of the allocation of capital in the economy. In fact, a shift from bank deposits into a central bank digital currency would merely change the composition of banks' funding sources, with less private sector deposits and more central bank funding. Another consideration is that a digital euro could improve the allocation of capital by facilitating access to payments and reducing transaction costs. This would help to unlock business opportunities. It could also enhance competition in banks' funding markets and improve contractual terms for customers, with little effect on the volume of outstanding deposits and loans. Let me now discuss the possible effects in times of crisis. The risks to financial intermediation of issuing a digital euro are potentially more pronounced in times of crisis. This is the second way in which a digital euro could affect the financial system. A digital euro would give access to a safe, liquid asset which, unlike cash and in the absence of design-related constraints, could potentially be held in large volumes at no cost. Indeed, if not properly designed, in times of crisis, a digital euro could accelerate digital runs away from commercial banks towards the central bank. For this risk to materialize, a number of lines of defense, such as deposit insurance, supervision, and lending of last resort, would have to fail or be perceived to be insufficient in the light of how easy it would be to convert deposits into safe central bank money. But overall, the risk of a digital euro facilitating bank runs in times of crisis cannot be ruled out. A digital euro should therefore be designed in a way that enables this risk to be strictly controlled, as I will further discuss. Let me now mention the impact of on the international monetary system. Depending on whether it would be accessible to non-residents and interoperable with non-euro payment systems, a digital euro could have also far-reaching implications for the rest of the world. A digital euro accessible to non-residents could make the single currency more attractive as a safe and efficient means of payment for retail transactions across borders. But if a digital euro were not designed in a way that prevented it from being used as a form of investment, these benefits would come with the risk of amplifying international shocks. The fact that a digital euro would be very liquid may lead to foreign investors using it disproportionately and rebalancing much more forcefully into or away from it in response to shocks. This, in turn, could force foreign central banks to become more responsive to international spillovers. Conversely, these dynamics mean that the absence of a digital euro could make Europe more vulnerable to international developments in case of widespread adoption of foreign CBDC, central bank digital currencies. Let me now examine possible design and policy options to address the risks I just mentioned. To obtain the benefits of a digital euro, such as the ability to guarantee privacy in digital payments, financial inclusion, universal access, it would need to be carefully designed. A comprehensive analysis of such design features goes beyond the scope of this seminar. I will therefore limit my comments today to the features that are necessary to preserve the stability of the financial system. A digital euro should be an efficient means of payment, but crucially, in order to preserve stability, it should be designed in a way that prevents it from being used as a form of investment. A number of possible design features could satisfy these principles. One option would be to limit the amount of digital euro individual users can hold. This would prevent large inflows of bank deposits into the central bank. One way of doing this would be to require any amount above a certain threshold to be redirected to a bank account. This would, however, prevent the digital euro from being used for large transactions. Another option would be to set a penalizing remuneration on individual users' digital euro holdings above a certain threshold. Up to that threshold, amounts held in digital euro would never be subject to negative interest rates, and would thus never be treated less favorably than cash. Above that threshold, remuneration would be set so that larger digital euro holdings are only worthwhile to realize larger payments and not on an ongoing basis as a form of investment. Tiered remuneration could provide a less distorting way to disincentivize large digital euro holdings. At the same time, it could present implementation challenges. For example, in times of crisis, it could be necessary to adjust the remuneration of the digital currency, but this could signal that the central bank is anticipating financial tensions, leading to self-fulfilling instability. Similar design features would have to be applied to the use of a digital euro by non-residents. This would stop a digital euro replacing other forms of investment and facilitating currency substitution in countries outside the euro area. In any event, international cooperation on design, cross-border use, and interoperability would be key to reap the potential benefits of central bank digital currencies for cross-border payments, while addressing risks to the international financial system. Let me conclude. A digital euro represents a natural response to the digital transformation, not only to underpin efficiency and innovation, but also to preserve the role of the central bank in offering safe means of payment. This safety is crucial in maintaining public confidence in money and ultimately in the state. A key goal of a digital euro should therefore be to preserve a fine balance between sovereign and private money to ensure payments remain stable and efficient. But if innovations in central bank money are not well designed, they can generate financial disruption. To avoid any unintended effects and reap the full benefits of a digital form of central bank money, we will carefully consider all aspects of its design. Our public consultation on a digital euro is part of this exercise. In the spring, we will publish an analysis of the replies we received. This analysis will provide important input into our decision towards the middle of the year about whether or not to formally launch a project to issue a digital euro. As our work moves forward, the views of citizens, businesses, banks, and all stakeholders will continue to be of utmost importance in ensuring that a digital euro would be optimally designed and ultimately serve Europeans well. Thank you for your attention.
Thank you so much, Fabio, for these very comprehensive and very clear remarks on a very, very important topic. And I think you ended well by saying, well, you are starting a consultation process, and you are in a consultation process. And of course, part of what we are doing here now in the seminar is wanting to hear from our audience what are their concerns and questions, and bring some of those to your attention. But before I start reading some of the questions, and I can tell you there's already quite a number of questions coming in, I wanted to sort of spend a few minutes focusing perhaps first on sort of the core of your proposal, which is this idea of the fact that the design of the digital euro is a fundamental feature and of fundamental importance to ensure that a digital euro is not a problem for financial stability. And the core issue that I think you raise and you discuss is exactly the question: what happens in case of individuals or companies wanting to decide that the bank account is actually not a very useful form of holding their savings anymore, and instead they push everything into a digital euro. And so if that happens, and if it happens in particular during a financial period of financial volatility, one could observe things like bank runs and similar, because basically why hold a euro in a bank account if you think the bank can fail, and instead you have an alternative which is available with a mouse click and which is completely safe and completely stable. So perhaps we can spend, and I can push you just to explain this point with the penalty rate, because I think it's a very important point that you explain again. And I think with Ulrich Binzal, you had a piece in VoxEU in which you argued that the first 3,000 euros or something like that should be interest rate free, meaning the digital euro would have a zero interest rate. While if you go above the 3,000, so if an individual holds more than 3,000 euros, he or she would have to pay a penalty. And in times of financial instability, you could even increase that financial penalty so as to provide incentives to disincentivize individuals from taking money from the bank account. So can you perhaps just walk our audience again through this point, because I think it's sort of the core of the proposal that you made, and I think it will be very interesting to understand that a little bit better.
Thank you very much, Guntram. You are right. This is a fundamental issue that needs to be discussed before the launch of the digital euro, before the introduction of a digital euro. Let me do an introductory observation. The objective we have is to make the system, the financial system of the euro area, more efficient without making it less stable. That is the constraint under which we are working on this project. And you are absolutely right. If we provide a means of payment that is free of any form of risk, it is liquid, no default risk, because it is a liability of the central bank, it would be too easy, just too easy for savers in times of crisis to be tempted to shift from their bank accounts to a digital euro. And this would make crisis more likely and possibly more pronounced. So it is clear that by introducing this new means of payment, we have to introduce also some form of constraint, first to preserve banking intermediation in normal times, so that when interest rates are low or close to zero, or nobody has the possibility, the temptation and the possibility to take out its deposits from the commercial banks and move them into the balance sheet of the central bank through the digital euro. This must not be possible. Similarly, in crisis times, when their investors have concerns on the solvency, the stability, the soundness of individual banks or the banking system as a whole, they should not have the possibility to run more easily than they can do today because of a digital euro. Now, how can you obtain this objective? That is, provide savers an additional means of payment, but no more instability, more efficiency, but no more instability. Well, you need constraints. You need to avoid the possibility that massive amounts of deposits fly into the balance sheet of the central bank through the digital euro. This constraint could come in two forms. One is simple to say, less simple to implement. That is, everybody is allowed to hold digital euros up to a certain threshold, okay? Let's say 3,000 euros. This is just one among many figures that we computed because it is slightly above the current average holdings of euros of cash, of euro banknotes by euro area citizens based on our survey, and is by and large in line with the monthly wage of most workers in the euro area. So let's say that we are still studying this issue, nothing is decided, everything is under consideration by the relevant technical committees in the Eurosystem. But let's say that there's a threshold of 3,000 euros. What does this mean? That everybody, you, me, all those who are in the audience today could hold in their smartphone the possibility to pay with cash up to 3,000 euros. They cannot hold more than that. If they have to make a payment for more than that, they could use up to 3,000 euros in their smartphone, then they should draw from their bank account. Similarly, if they receive an incoming payment, they can accept money until they hit the threshold, the 3,000 euros. Beyond that threshold, the money should be redirected to their bank account. Why is this necessary? Well, because even if you are concerned about the possibility of your bank being unstable, you cannot run more easily. By the way, we are not limiting consumer choice in any way, because all the possibilities to allocate your wealth, your deposits, your liquidity would be there in any case. Cash would still be available. The possibility to invest in low-risk securities would be unchanged. This is one possibility. A constraint, a limit, you cannot use more than 3,000 euros. You cannot hold more than 3,000 euros. It does not mean that you cannot do payments for more than 3,000 euros, because as I just explained, you can draw or redirect money into your bank account. There's a second possibility, which is possibly less distortionary. You don't impose constraints, you just disincentivize large holdings of digital euro. How do you do that? Well, suppose that we choose the same constraint, 3,000 euro. Then I would be able to hold digital euros even beyond that threshold. But my remuneration would be 0 or higher, depending on the remuneration which is chosen, never below 0, never worse than cash, up to 3,000 euros. Beyond that, I would have a remuneration which would be penalizing larger holdings. What does penalizing mean? Well, a remuneration that is lower than market remuneration. Today, market remuneration is around 0. We should have a negative remuneration only on the money you hold above the threshold, not on the 3,000 euro below the threshold. Let's call tier 1 the 3,000 euros and tier 2 the money you hold in excess of 3,000 euros. So on tier 1, you get remuneration at market rates 0 at a minimum. On tier 2 holdings of a central bank digital currency, you get something which gives you a disincentive to go above. This means that, again, you have not a constraint, but a strong disincentive to shift money from your bank deposits, that is to increase potential instability. And it is clear to, I think we have an audience of experts, economists, that we can calibrate, in theory, one could calibrate the penalizing remuneration on the tier 2 holdings of CBDC so that the two systems are equivalent. In the limit, this is an economist abstraction, don't take me seriously. If I set the remuneration on tier 2 to minus infinity, it's equivalent to a physical constraints, right. Outright constraint. So these are the two possibilities that can limit large inflows into digital euro, large outflows out of bank deposits, and this can be applied also cross-border. You don't want to generate large capital inflows of outflows cross-border that could have destabilizing effects on countries, on intermediaries even abroad. So you want to have some form of constraint even on holdings of digital euros by foreigners.
Right.
I hope this explanation clarified the concept.
No, it is very good, and I do want to come back on the international dimension in a second. But before I do so, I do want to touch on quite a related issue, which is the issue of privacy. And a lot of people raised this issue also here in the chat. And really, I guess the question I want to push is, I mean, if you come with a model where there are certain limits and thresholds of 3,000 euros or however you want to define them, I mean, you need to basically track the individuals and the cash holdings, the digital cash holdings that they have. I mean, currently, if I have under one mattress 3,000 euros and under the other one 5,000 euros, you don't know, right? Nobody knows. So this is my privacy, how many euros I have under my mattress. Now here in this system, you need some sort of a tracking and an identification system, basically, and basically some sort of a centralized ledger, I guess, where you keep track of every individual digital euro, and you connect that digital euro to the individual that actually owns or holds that euro. So can you say a word about sort of the ledger technology that you think of, and how you can ensure that those that want to be anonymous when they pay with a digital euro, they can keep their anonymity?
Well, thank you for this question. This is a fundamental question. In the public consultation that we just did, the most important feature, according to the answers of the respondents to the consultation, was the importance of privacy. People care a lot about their privacy, and for this reason, we will devote enormous attention to this feature of the digital euro. Let me say upfront that we are a central bank. We have no interest whatsoever in acquiring data from individual users of the digital euro for any commercial reason. This differs, as it is self-evident, from the incentives of private players. We would never use the data of users of a digital euro for any commercial reason. We are taking, as I said before, privacy very seriously. We have already done work, by the way, in my speech, which is published on the website of the ECB, you will find all the references to the statements that I'm doing, that I did in my speech and that I'm doing in this conversation. We have been working quite hard on how to protect privacy to the extent possible. And the results of those analyses are published in our website. There are various ways in which you can protect privacy. For example, you might think that for small transactions, you can guarantee full privacy by allowing users of a digital euro to do offline transactions. And there are different degrees, and in offline transaction, the degree of privacy would be almost 100%. And when the information on the payments is held at the central bank, it would be only available for reasons related to anti-money laundering, the contrasting of the financing of terrorism, but no other use would be foreseen by the central bank. It is true, however, that if we want to guarantee the stability of the system and enforce those limits that I mentioned before, the threshold, the maximum holdings of a digital euro, we cannot guarantee 100% privacy on larger payments on the holdings of a digital euro. Why? Well, if you want to control to check that nobody holds more than 3,000. You want to know if two different smartphones, for example, if you use a smartphone to hold your digital euros, they belong to the same person, so that we can put together those holdings, and if they add up to a number which is higher than 3,000 euros, we will not allow that transaction. But again, we are working on different degrees of protection of privacy, from full protection for very small, don't ask me a number, I don't have a number in mind, but small transactions which are necessary to protect your day-to-day payments, which might reveal something about your political orientation, for example, or your taste. If you eat pizza or broccoli, it would be a good information for your insurance company, because broccoli are much safer, although the taste is different than pizza. So we could foresee the possibility that small transactions are totally anonymous and they can be done offline. We have also studied the possibility of giving digital euro users so-called anonymity vouchers. You have a voucher, you can spend it in a way that is not traced by the system, and would allow you to keep full control of your confidential and personal data. But you are right, there is a tension between controlling and guaranteeing the functioning of the system, preserving the stability of the system, and the protection of privacy. At a certain point, that trade-off should be analyzed not only by the central bank, but by the public at large, that we are, and we will continue to consult by European institutions. It will be a matter for a decision by legislators, by the other European bodies, and we will strike a balance which will guarantee the privacy to the extent possible, while guaranteeing at the same time the stability of the financial system.
Okay, there's a lot of questions, but I can't resist, and I do want to ask you one more question, which is, again, relatively technical, but which relates to the international role of the euro and how the digital euro interacts with the international role of the euro. And you talk quite a bit about, what are the worries and, how you want to address the worries in terms of the global financial system. But I do want to push you sort of a bit in the other direction and say, isn't the digital euro also an opportunity to increase the use of the euro globally as a means of payment, and thereby a means to boost also the role of the international role of the euro as a currency? And a sub-question, or a related question, is more specific to the question of the euro area versus the European Union. As you know, the euro is the currency of the European Union. However, it's not used everywhere. We have still a lot of countries with their own currency. I wonder, what is your thinking on the digital euro in non-euro area EU countries, such as, let's say, Poland or Bulgaria? And I asked that question also, thinking about some of those countries. They are actually quite poor countries, where the thresholds you identified and the numbers you just gave, 3,000 euros, it's a huge amount of money in some of those countries. And if the euro was available as a digital euro in those countries, it could perhaps mean that a majority of households in some countries, especially the very poor countries such as Bulgaria, they could just as well switch away from bank accounts in the first place and have all their savings in digital euros, because the savings are so low. So if you can say a word about sort of euro area, non-euro area, and a word about what it means for the international role of the euro, that we digitalize it.
Yeah, this is another fundamental issue, and thank you for this question, Guntram. The same caveats that I mentioned before, that is the introduction of a digital euro should not create instability domestically, applies also internationally. There is an unwritten rule for central bankers That is, you should not make your system more efficient at the cost of making other systems less efficient or even unstable. So even for users, non-resident users, we should have the same attention and the same safeguards to avoid that a digital euro becomes a form of investment. Of course, foreigners coming to the euro area should have access to digital euro. For example, if they are tourists, if they come for business trips to the euro area, they should have access to a digital euro. It's a different thing to allow them to hold digital euros when they are in their home countries. And there is a clear risk, which is the risk you have mentioned, the risk of a currency substitution. There are countries where the unit value of deposits is very low. There are countries that do not have a sound currency like the euro. The internal governance is not as strong as the governance of the euro area. The capital market is not as developed as in the euro area. So it would be just too easy for them to transfer a substantial amount of their wealth into a digital euro. In full respect of the principle I mentioned before, first, do not harm, we would design a digital euro to avoid these risks. We might well calibrate the maximum holdings of individual of digital euro by individual users abroad. We could, calibrate at the country level. This is something that we are also examining, but certainly we would want to avoid the risk of informal currency substitution. We know that formal currency substitution is that is the situation in which in one jurisdiction you use the currency of another jurisdiction. That's an uncommon situation. In contrast, situations in which in one country informally many savers, businesses use largely for daily payments and also for their investment, or for the investment of their wealth, currencies of other jurisdictions is not that uncommon, and we will certainly try to avoid this. We are working actively within the G20, within the FSB, to facilitate cross-border payments, because in many cases, the holdings of digital euros by foreign savers, by foreign businesses, is due to the fact that it is difficult to do payments cross-border, there are remittances. We have to improve the efficiency to reduce the cost of cross-border payments. And on this, we are working quite intensely. And I'm quite confident that we will have results and progress in this field.
Wonderful. So let me now turn to some of the questions. And if you agree, I would always read 2 or 3 questions to you, and we bundle them, because otherwise we will never get through them. So the first 2 questions are by Mr. Anonymous. They are the most popular ones here. So the first one is, why would a sovereign Europe-wide payment scheme require access to the ECB balance sheet? Can't the EPI achieve the same goals in terms of payment efficiency? And another, or the same Anonymous, is asking, second question, in case of acute Greece-style or Cyprus-style crisis, does the ECB believe it can set an interest rate low enough to deter flight to digital euro? The third question is by David Postius, which is a bit in a different direction. It's about the cryptocurrencies. And do you see cryptocurrencies to be in direct competition to the digital euro? What would be, in your view, the strengths and weaknesses of the digital euro versus Bitcoins? Or if I can sort of provoke you a bit more on this, do you even think that we have to introduce the digital euro as a response to these cryptocurrencies? So those are 3 of 35 questions. So Fabio, you are muted, sorry.
I wanted to check if you were following carefully. Okay, so let me address these three questions in turn, and thank you because they are very relevant questions. So why do we need a CBDC, a form of sovereign money, and the EPI is not enough? Well, first of all, the EPI is still a work in progress. It's a very promising project. We don't have it yet. Second, the EPI would be commercial bank money. And I think that for centuries, central banks have been providing sovereign money, means of payments that can enjoy the trust, the solidity, the strength of the state, and I think this should continue in the future. Why? Well, there are situations in which you need an anchor of stability in the system, and commercial bank money is sufficient 99% of the times, but there are situations in which you do want to use sovereign money. By the way, by introducing a digital euro, that is a digital form of sovereign money, we would make also the EPI more competitive, more likely to become successful in competing with other potential suppliers of digital means of payment. Why? Well, because we would provide with our digital euro the raw material that can allow banks which participate to, sorry, the EPI is the European, I gave for granted that everybody knows what the EPI is. It's the European Payment Initiative. It is a consortium of European banks that is trying to put together a Euro area-wide payment scheme based on credit cards and credit transfers. It is trying to build this initiative, and it is trying to expand its activity in all Euro area countries. We are not there, and the banks are working hard on this project, and the ECB is providing its support to the project. The products, the services which would be offered by the European Payment Initiative would be more competitive, more successful, and cheaper in case we provide the EPI. As I mentioned in my speech, we are in contact with banks, non-banks, Euro area intermediaries, because we want them to use, to the extent possible, the digital euro to build business models that give innovative, cheaper products and services to their customers. You could have smart contracts built on a digital euro. It would be a means of payment that could be used everywhere in the euro area. It's not necessarily going to be the case, not only with the EPI, with any private initiative. This would be a sovereign form of money that in the end would enjoy the status of legal tender. You can use a digital euro everywhere. Okay, so there are a number of advantages. It will be perfectly liquid, no default risk. 99% of the times, the commercial money has default risk because you have supervision, capital requirements, you have deposit insurance. But in systemic crisis, people may put a different value also into the deposit insurance. This is not going to be the case with the digital euro. So the two are complementary. One does not exclude the other, quite the opposite. The availability of a digital euro would make the activity of the EPI of European intermediaries at large, not just the EPI, or intermediaries who are willing to provide euro area-wide payment services stronger, more competitive. On your second question, in case of an acute crisis, do you really think you can set a penalizing rate low enough to disincentivize transfers? Well, first of all, let me mention a number that I mentioned before. I remember in I think it was 2010 during the sovereign crisis, when some countries were really at the risk of leaving the euro area. You remember the situation of Greece, the referendum, the deposit outflow. Even in that case, the remuneration of the safe asset, by definition in the euro area, that is the Bund, never went below 1%. But this is just to put this into context. But the anonymous attendant to this seminar is right. -1%, -2% could be not enough to prevent capital outflows out of banks. But again, we could calibrate the system in such a way to replicate a highly penalizing remuneration for the tier 2 holdings of the digital euro. But again, we are not at that point. We need to do a lot of additional technical analysis before reaching a conclusion on whether this tiered remuneration and this disincentivation based on tiered remuneration is indeed feasible, and we still have to reach a conclusion on whether this could be a way to guarantee the stability of the system. We will guarantee the stability of the system one way or another. We still have to decide which of the possible ways we will choose and the parameters with which we will implement that safeguard. Cryptocurrency, do they compete with us? No. No, because we provide safe, totally liquid money. And there are different definitions of crypto assets. One is the Bitcoin. That's not money. You cannot go to a bar. Well, today the bars are closed. You cannot go in 6 months to a bar and ask for coffee and pay with Bitcoin. You can buy Tesla, but if you can eat Tesla, sleep in the Tesla, and get coffee from the Tesla, you are fine. But as long as you have to buy something else in addition to Tesla, you cannot do it with Bitcoin. It's not a means of payment. It's not a unit of account. I know no company that writes its annual accounts in Bitcoin. So it's a speculative asset. It's an asset for gamblers. And most of the time they have been lucky. Somebody has lost money. Some have lost money because they lost their key, their password. We offer a totally different product. A product that is safe, that does not change its value dramatically every day. You put 100 euros in the digital euro, you wake up the following day, you still have 100 euros. You can sleep for a week, you still have 100 euros. So there's no way you would lose money with a digital euro. We will have safeguards. That's central bank money. It's a legal tender. It could be used everywhere. You don't have the anxiety of going somewhere, being willing to pay with a Bitcoin. Oh my God, I cannot use my Bitcoin. What do I do with the Bitcoin now? How do I get my bread and butter and my wine? We offer a different part. There's no competition whatsoever between the Bitcoin and the digital euro. The global stable coins, well, they also carry a number of risks that are unknown, simply unknown to a digital euro. For example, a stable coin could be subject to a run. Well, because you know that the value of stable coins are linked to the value of the so-called reserve asset. That is the asset in which the stablecoin issuer invests the proceeds of the sale of the coins. They invest into the reserve assets, and the value of the reserve assets determines the value of the stablecoin. And then you put money, but the stablecoin issuer cannot guarantee 100% the value of your money. A digital euro would do that. The digital euro is just like cash. The only difference that it's not made of paper. It's digital. You bring it more easily in your pocket if you hold your smartphone in your pocket or in your bag, wherever you have your smartphone. Or in the future, I'm sure we will hold and use our digital euro with the glasses. Maybe you blink one eye and you pay with a digital euro. Be careful, don't blink to two eyes, you pay double price. But it's a totally different animal. Okay, we provide a means of payment which is free of liquidity risk, free of default risk, usable everywhere, guarantee of payment because it's legal tender. We don't think that we will have that competition.
Yeah, I mean, that's of course a very important debate, and especially with Libra, I'm sure that some might think it is a response to Libra. But I think you made your point. Let me get 3 points, 3 more questions here, and then I'm afraid we will have to close because time is flying. But you know, I do want to ask 2 questions by someone called EU Economist, whoever that is, and he's asking, well, a digital euro, could it not be a great tool for dedicated social policies? Thailand recently gave 3,500 baht into mobile e-wallets to citizens with low revenues. So it's basically helicopter. Isn't that a great way of doing helicopter money? I guess that would be a different way of asking the question. And the EU Economist also asked whether that should be a way of doing dedicated green policies. If the ECB opts for a programmable digital euros may be reserved to buy green products. So that would be another provocative idea. My colleague, Gregory Kleis from Bruegel, is asking, well, another solution to give access to central bank liabilities would be not to provide it through a central bank digital currency, but through full reserve banks. What do you think about that option? And there's, unfortunately, I mean, there's many other questions, but I think we covered a lot of those. There's many people asking about privacy issues. How serious do you take it? And I think you've answered that very comprehensively. Financial stability issues were asked, but I think we covered those really to a large extent. But I think this aspect of, you know, the fact that you have a new instrument with the digital euro and you can basically directly give it to citizens, and this helicopter money question, I find that quite intriguing, and it certainly deserves a bit of a discussion. And perhaps my very last point is sort of, there is a fear in the country that I know best, Germany, that you know, the digital euro is just the first step to abolish cash. And you know, once you have abolished cash, you know, then you can shamelessly drive down the interest rate even further into negative territory. And I'm sure some people would love to hear what would be your reply to that worry. And you are, yeah, perfect.
Thank you, Guntram. All very good questions that give me the possibility to clarify important things that continuously come back into the discussion. Let me go with the easy ones first. Full reserve banks. This is an important discussion that is taking place, will take place, but this is not the discussion we are doing today. We are not aiming to change the structure of the financial system by introducing the digital euro. There are many things you can do to make bank liabilities, commercial bank liabilities that are used as means of payment as safe as possible, but this is a totally different issue. If I had to enter into this, I'm sorry, I would be boring for the next hour. So this is not what we are dealing with in our digital euro project. Privacy, very quickly, a fundamental issue. I will be reporting to Parliament the next few weeks, and given the prominence that privacy had in the responses to our consultation, I will address privacy in more detail. But if you want to understand more, please give a look at the references that are contained in my speech on privacy. You will see how serious we are, because we have already done substantial work by ourselves and with other central banks on how to protect privacy in digital payments. Again, when the central bank would step in providing digital means of payments, we would improve confidentiality in digital payments. We have no interest in extracting any revenue profits from the data of the users of a digital euro. Abolish cash. No, We will not abolish cash. We are not a profit-making institution. I know the argument because I gave an interview to Spiegel yesterday. I spoke with other observers who are concerned that sooner or later we might abolish cash. As long as there is demand for cash, we will provide cash. We are not maximizing profits. It may be possible that at a certain point, the demand for cash would be limited and the cost of producing cash would be lower than the seigniorage, but we are not here to maximize profits. For example, if you look at the activity, the operations we are doing in our monetary policy this year, we will have profits which are lower than last year. Why? Well, because we have expanded our purchases, we have lowered the interest rates, and the combination of larger quantities and lower interest rates is that in the end result is that we have less profits. But we did it. Why? Well, because we are a public institution. We don't care about our profits. We care about the welfare of the European citizens. We provided the monetary policy that is, in our view, the best to guarantee price stability, and after guaranteeing price stability, stable growth in the euro area. The objective was not to maximize profits. And this, I think, is a proof that our strategy is not to maximize profits by substituting a high-cost means of payment with a low-cost means of payment. That is not the goal. Again, let me say this, will continue to provide cash. Also because cash has unique features that even the digital euro would not have. Suppose that you have an electricity outage and then the battery of your smartphone is down. What do? You take cash out of your pocket and you pay with that. So we are not going to deprive European citizens with a means of payment that, first, they continue to like a lot. Second, that we expect they will continue to demand for long. And third, which has unique features that can be indispensable in a number of situations. We address this issue in our report on a digital euro. I will continue to repeat because I can understand that some people are concerned that we might go into that direction. But again, do not forget that we are not here to maximize profits. We are here to provide to the people the product that they need to make their payment smoothly, without risk, in any situation across the euro area. With digital euro, if they want to pay digitally, with cash, if they want to pay at the point of sale physically. Last question, here I can be very quick. Social policies, helicopter money, this is not the role of the central bank. The central bank is not in the business of facilitating helicopter money. This is for the government. Social policies. If you think that we should be part of social policies, we don't need a digital euro. We could give cash. We could give money in the bank accounts of people. We're not doing that. Why we are not doing that? Not because we are bad people, but because it is not our role. We are not using our own money, and we don't have the political and the democratic delegation to do that. That's for governments. So we are not using the means of payments we have today. We will not use the means of payment we will have tomorrow to do something that is outside our responsibility, that is outside the delegation that we got democratically from the people through legislators. We will not do that. That is not our intention. Buying green products, we will not give digital euros conditionally on what you buy. Digital euros will be means of payment that will be owned by users, by citizens, what they buy. I would be very happy if they use them to buy green products, if they use them to reinforce the contrast of climate change, but we will not provide digital euros with this conditional use in mind. We will provide a means of payment that will be in the hands and will be used according to the taste of the people. That will be the only way in which we will behave according to the delegation we have by the people.
Wonderful. Thank you so much, Fabio, for taking the time today to answer these very rich questions. I mean, it was a rich set of questions, and it was, I think, a really substantive and very helpful and rich debate. So let me sincerely thank you for being so open, so frank, and so clear, and for being with us and sharing your thoughts. Thank you very much, Fabio.
Let me thank you. Let me thank all those who were in the audience for very good questions, for very interesting observations. These meetings, these interactions are fundamental for us to understand the needs, the concerns, the elements of the digital euro that we are not explaining sufficiently well. And this is fundamental for us for improving our work and to make our communication clearer going forward. Thank you, and thank to everybody.
Thank you very much. Grazie mille. And thank you to all of our audience.
Vielen Dank.
Bye-bye.
Bye-bye.